State Bank of India announced its fourth quarter numbers today. Asset quality worries continue to haunt India's largest bank as it posted 140 basis point of a rise in gross non-performing assets. What's more, profits took a sharp knock thanks to higher provisioning. Gross NPAs rose 6.5% from 5.1% in the previous quarter. The major negative was the reported slippages, which came in at 30,000 crore rupees. The silver lining, though, is the FY17 watch list, which is slightly over 31,000 crore rupees. Ritu Singh caught up with the SBI Chairperson Arundhati Bhattacharya on the sidelines of the results press conference and started by asking her about the bank's asset quality issues.
See, I'm quite certain recoveries will be there. At the end of the day, after having created NPAs to the extent of 98,000 crores, obviously, if there are no recoveries, it would be a very sad thing. Not only that, you must understand many of these accounts that have been slipped in the last 2 quarters, these are working assets. So they are not closed factories, they are not roads to nowhere. They are actually working assets, and there are people who are employed in those units. And to that extent, it is important that there should be some resolution, because we obviously don't want productive assets to be wasted in a resource-starved country like India. So yes, we are looking forward to resolutions. Regarding pressures and how it will be going forward, it will depend upon how the economy pans out. At any point of time, it is very difficult to call this unless you're sure about how the economic performance is. There, I would say that, there seems to be a general feeling that business confidence is up. I was just telling you all jokingly that yesterday, when I met with many of our customers from this circle, we found that they seem to be more confident about their prospects in the future. Therefore, to that extent, I would say that we do believe that things will turn out better, but I still do believe that probably, we'll have to see growth coming first, and that credit growth will follow only thereafter.
But of the 31,000 crore watch list you've declared, how much of a risk do you see of these, spilling over as NPAs? Could that cloud the outlook perhaps? And which sectors specifically are seeing the most stress?
No, I don't think there is any question of clouding any outlooks. These are accounts which are weak. These are accounts that are under special monitoring. We conservatively can say that maybe 70% of these will also go. So you sort of price it in, and then you proceed with whatever you are doing. And even there, we have about 3,300 crores of provisions, floating provisions that we have made for all of these accounts, not individually, but they are floating provisions, and they are outside of our PCR. Also, we have another 1,100 crores of countercyclical provisions, which we have not received any permission from RBI to use. So there are provisions for in respect of these accounts also, in case they do slip.
Talking of provisions, RBI has also asked all banks to start providing for restructured accounts 15% by March 2017, so 2.5 each quarter. How much more provisions will you have to take for that, and how much excess provision are you already carrying? You mentioned some amount.
Yeah, but actually speaking, how much I would be required to take for the restructured accounts itself, I don't have the numbers now. We could provide it to you subsequently. But we have factored all of this in. Going forward, we have factored all of this in. And therefore, we are not saying that in 2017 things are going to be really, very rosy, because there are a lot of challenges. As I said, the biggest challenge will be to start on the resolution process. Yes. That must happen very quickly now.
On the sectors where you're seeing stress coming down, and how are you calibrating your approach towards large corporates now that you've seen so much stress in them? Could you answer that?
So calibrating our approach to large corporates, we are very careful about which projects we support. We are also careful about ensuring that we give credit, further our credit lines only to those corporates that are well rated. So that is something that we are continuing to do. And whether some sector is stressed or not, at the end of the day, risk is micro, not macro. But overall, of course, sector-wise, we have certain limits. And in respect of the stressed sectors, we are not increasing our exposures.
All right, that's Ritu Singh in conversation with Arundhati Bhattacharya.